We are live. What's up, everybody? Today is Thursday, January 23rd, 1 p.m. Thank you for joining us today. I'm excited to have this conversation with Samantha today because we are at something of a pivot point, I would say, in markets as we approach the Fed. Trump kind of in seat, S&P revisiting all-time highs. And so I'm really excited to hear what Samantha has to say on the macro front and where we sort of overlap in our short-term thinking. Hey, Samantha.
I can see you, I can hear you with a whole new backdrop. Happy New Year.
Happy New Year to you as well. So, a lot of interesting stuff happening here in the markets. I have a little presentation that I wanted to bring up that just kind of gives some background on you and LaDucTrading. And for those of you from the LaDuc side of the fence, so to speak, we'll just give a little background on who SpotGamma is. So, we're going to start that off first with a brief presentation, just a few slides that give a little background on us respectively, and then I'm really excited to dive into the market conversation. So, Samantha, you guys have an impressive operation over there. I know you and I have had a couple of conversations over these past few years. Now, time flies, man. I could say years. But you want to tell us a little bit about who Duke Trading is and kind of walk us through these?
Sure. I actually started out solo a number of years ago when we were connecting, and I have since built it to a strong bench of 10. So we have
Wow.
10 full-time, yep, very client dedicated subject matter experts, everything from macro to micro. And I actually started out with this tagline about 6 years ago. Now it's everywhere, macro to micro. But what I was trying to do was bridge the gap between really the siloed thinking within the macro, kind of guru backdrop of only macroeconomics and how policies do dictate price. I believe that firmly. And I wanted to kind of rotate that into my pattern recognition and my interest in the quant and the fundamental and the technical, and the sentiment and the macro and all of that intermarket stuff that I brought to the table to identify sector rotation and then drill down to the stock, which is the micro, or the option tactic, which is also the micro. So before there was kind of this, you know, micro was retail, macro was institutional, and never the two shall meet. And I really wanted to bridge that gap. And so that's exactly what I've done. And now I've brought in, like I said, a team because, for example, I know you're more aggressive in your time frame of trading, which is kind of the chase thing. I'm not a scalper. I love to use the backdrop of macro and kind of like that funnel come in to pick the best stocks and the best option tactics. But I'm very, very selective versus I know the excitement of chasing. So I run a live trading room and I have live trading room moderators who are much more focused on that kind of momentum backdrop. And that's really where two of my more futures and day traders, if you will, or multi-day traders are very focused on the SpotGamma tools, extremely focused. And I want to show you how they use that, how they interpret that. I'm more focused on your kind of founder's note. I love your overarching insights on the macro. And then I can get a little, a little cheesy, which is to say, I like to identify price targets for the day. And I use some of your expected move. And we talked about this. I had a hot streak one time where I identified to the penny using kind of the combo. And after 3 days, I said, oh my God, that's too intense. It got way too much attention. I don't want to be known as a scalper, but it was very helpful. So your tools are awesome. We've used them for years.
Thank you
And
very
now we're
much.
kind of coming together and doing this partnership to show how we use it. But this is definitely, again, the macro is the narrative. And so you'll see me posting on Twitter, right? Or especially for clients where I get into deep dive focus on the market as it relates to policy intervention, as it relates to option flow, as it relates to Bank of Japan and the yen carry trade. So I'll go into deep dives on the macro, but the live trading room and, like I said, a number of my contributors are very focused on shorter duration and helping clients kind of trade safely. I also, because I am an options trader, I have phenomenal option contributors. So whether they're advanced options, income generation, or like Archana, or Hans, who teaches options, we're using your tools very much as a backdrop to help and provide that custom trade engagement. Why I run a live trading room, why I have these contributors posting their trades and their analysis of the SpotGamma tools and how they use them in their trade setup. So This is the bench, and I've worked with almost all of them for years, like years. We have a really phenomenal team. And again, this is seasoned. Jeffrey, comes from an ARB, portfolio management, New York, ARB background. He's very focused, by the way, on classical economics, which is not my jam. I've learned tremendous amounts. And he's focused right now on the oversold value of China plays, right? And when they're going to, and what that yield, differential means and all that stuff that mostly fixed income and hedge funds and the like are really into. Hans, like I said, he's our options mentor. He also teaches options, how to do it safely, either as alpha or as a hedge protection, if you will. He posts amazing trades, and it's just, he's run multi-billion-dollar funds from a hedging perspective. So this is all kind of part of that filling out what clients might need if they're more on the institutional side, or they just want a live trading room all day long. That's what Nelson and Archna run after I close mine, which I do in the morning every day. And the team is like, Bob is just oil and gas, and his father before him was just oil and gas. So we kind of round out with futures and the chase, where I focus more on the macro trends, sector rotation, and swing time frame. And then we get that kind of robust backdrop of those who are also portfolio management and trend long. I have a trend long portfolio as well. So looking for the themes, working together in collaboration with clients, it's a lot of fun. And this is the club offering that basically I wanted to highlight, because we're all there. It's access to all of us. So full engagement. And that's my team. And that's what we do all day long, from live trading room to portfolio management to custom engagement. I'm very much focused on macro guardrails with Jeffrey, and very much focused on sector rotation, which is my thing, growth to value, so I can help time the market direction. And then we have, of course, stock positioning. This is an example. Rithika, who's an Elliott Wave trader, she's also my live trading room moderator. She's crushing it on the multi-day type of directional option swings. So she posts her trades. It's real time. The clients get notified in our Slack member workspace. The portfolio is all updated. These are an example of, I don't want to be known as a trade alert business. I really love trade analysis, and clients push their own damn buttons. But we also have this too, and I want to make everyone aware of that. And now we're kind of rolling this out on a wider basis, where we're using a lot of the SpotGamma tools every single day. And we've been doing it, honestly, for a while. So all we're doing is kind of making it official.
I love to hear it. Thank you. It's very flattering when you have the actual practitioners using the tools. And I say from my side, that's our holy grail, that we can help people like yourselves who do this professionally, right, to help improve their trading. So
I can show you. If you want me to show you a few examples.
Yeah, we would love to, for sure, dig into some of those examples. I would love to see how you put the pedal to the metal, so to speak, and break some of that down. For those of you who are wondering, we're going to be presenting, right, a special offer community here to take advantage of the club membership, right?
Absolutely. And we have longtime clients as well. These are, lovely testimonials. They're still clients. I love working with these clients, because they also have their, respective subject matter expertise. So we start collaborating, and this is a fabulous group. So I not only have a family of, team members who are subject matter experts and sharing their trades, but I also have clients who are amazing and sharing their knowledge of the space. So long story short, this is our club offering, and I just welcome you to check it out. Now, I can definitely show you, for example, I just popped in and I saw how Hans and Mikey and Archna are using your respective tools.
Just a quick overview on SpotGamma here for those of you who are new to us from the LaDuc community. My name is Brent Kochuba. I'm the founder of SpotGamma. We started in January of 2020, so we were almost 5 years to the day. Time really flies, and essentially I have 20 years of institutional derivative experience, so mostly focused on U.S. options during that time. And what we really focus on is how the options flows are moving the market. And as Samantha alluded to, it tends to be a little more short-term, in shorter time frames. On a day-to-day basis, certainly that's the case with the proliferation of zero DTE and short-traded options. That's where the bulk of options flows come in. But where we find where our sort of disciplines overlap a little more and where things really spread out in terms of my time horizon is when we get big market crashes or even sometimes major highs, kind of like we saw in July of last year, where there was just such frothy sentiment, right, that it turned to be a significant kind of high there, right, in that July timeframe. We saw a lot of that in the options behaviors and some of the kind of unique indicators we were seeing. Stuff that we've never seen happen before, like record low correlation and 5-year lows and realized vol, and interesting, a lot of things that are kind of percolating now, which I'm excited to talk to you about. So what we, again, try to do here is take those options flows and project how they're going to impact the underlying market. Just to give everyone kind of a larger example, actually, of that time frame, and I think where our disciplines really overlap is there are times in the options market that the options flows are driving stability. We call this generally like positive gamma regimes. And we like to identify these areas in the market where those regimes are set to shift. And so I'm excited again today, as I just mentioned, because we have a real defined line in the sand, and I'm interested to see what your kind of like risk off level is in the FOMC. So we're going to talk about that here momentarily. But we write founders notes every morning. These founders notes break down where the kind of the risk on areas are of the market. And again, oftentimes these are shorter term timeframes, but when you scale out a little bit and see, okay, this is the area where kind of a negative gamma regime is going to set in and risk is really start to elevate, oftentimes that can cycle into 2 to 4 week cycles based around options expirations. And in early August was a great example of that as the market really broke down, and it set the stage for having tremendous volatility around the yen carry trade breakdown that you alluded to before. And the idea simply is that in that example, volatility was poised to break higher. And if you get that trigger like that yen carry trade, then we have an exaggerated response to whatever the risk off environment is, right? So should that yen carry trade have created a 60 plus VIX print? Many people would say probably not by itself, right? But when you have the options environment that's set to exacerbate volatility, then you kind of get these multi-standard deviation moves. We also laugh a little bit because oftentimes it is hedging flows or options flows that is dominating market movement. For example, on September 30th, we had the well-known JP Morgan collar trade. And there was another one of a macro fella out there, I will say, who doesn't know as much about the options landscape as you, Samantha, saying that Powell is lying to us and that's why the market is crashing. And it just turned out that 45,000 contracts of a well-known position called the JP Morgan collar trade was rolling. And so he mistook a market movement as a macro signal when it turned out to just be an options flow signal. And so I like to highlight this because it highlights the importance of, yes, you need to know the macro, but also understand that there are sometimes big flows that are just moving the market. I think that's something that you do really well, Samantha, so kudos to you for that. But this just highlights some of the value of watching how and why options flows matter so much. And we're going to show a couple of our tools today. Our new tool called Trace is a little bit of a again, shorter term time frame, but we're going to be using that in a bunch of our tools today as we kind of lay out the market. But we do have a website with a whole bunch of different trading tools, and Samantha and her team, again, we're very flattered to have you all use our options tools to help project a lot of your trades. And we like to say that we do what's called positional analysis, which is simply looking at how options are positioned and looking at how those hedging flows could move the underlying market. So we coined that term, kind of like you coined macro to micro. We say that we conduct positional analysis over here to help forecast market movement. So we have now that out of the way, and as Samantha is very kind to extend a special offer to the SpotGamma community, those of you in the LaDuc community can look out for a special offer from us as well, and that will be heading into your email. All right, hopefully you're still with me here, Samantha. Where do you want to dive in? I will set the stage. We had Trump take office. There was the very interesting kind of, I just dropped the name of it, the supercomputer AI. I just wrote about it this morning and now I just drew a mind blank. Elon Musk and in Apple, and it's not Apple so much, but Nvidia and a lot of the other AI companies out there are catching a nice bid off of some Trump plans around AI. And that really kind of sparked a little bit of a short-term surge in call activity. And some of the things that I'm watching right here are reminding me of the lows into December FOMC. So you have kind of a chase in the semi-stock world. You have crypto doing pretty well. We have realized vol starting to really contract off of the CPI number. We saw the VIX really drop quite a bit. And so there is this risk off sentiment into what I think is really the predominant, control of risk going forward, and that's FOMC next week. So can you sort of set the stage, the rate stage for us, or how do you sort of classify where we stand at this moment before we sort of talk about what's happening going forward?
Absolutely. First, I don't think it was CPI. CPI happened to be the pre-market print that was a little bit changed. It wasn't, I don't believe anyway. I think the hedges that came in the day before, in case there was a hot CPI, had to unwind. We also had bank earnings report that morning. They were very good. So that relief, if you will, that sentiment check got removed. More, I think, to the point, it was Bank of Japan. So this kind of goes to my focus on macro, where they basically came out and suddenly said, we're going to have a live meeting. And what that did was cause the yen and with it bonds to bounce, and US bonds, I'm talking the 10-year bond, to bounce, which put a stay of execution. In other words, softened the dollar, the US dollar, and yields. And it was that combo punch with also, I might add, oil started to soften. So if you take a look at that day, it looks really impactful, and everyone gave credit to CPI. I went out on Twitter and strong debunk. I said, no, it was such a little tweak on CPI. That's nonsense. The hedges had to cover. Banks absolutely did well. But more importantly, yen popped on BOJ, threatening to hike, maybe aggressively 50 basis points. And with that, bonds took a little like it was awesome. And in fact, that 14th, I had said bonds look like a good bounce because of yen, because of Trump coming in. And you kind of got to think about the dollar and yields. His goal is to soften them so equities can have this nice, robust rally. Then you add in all that Vanna, from the gap down into the Monday, January 13th election low. So if you go back to, I'll show you. Can I show you my chart? So take a look at this and just humor me, because I use a lot of intermarket analysis to do my market direction and sector rotation, and then I go and find the stocks. So this is what I want to kind of highlight for you. This happens to be a dollar yield ratio, and I have this on a 2-hour chart. So I do smaller time frame. I have this on a 2-hour chart, and I am identifying that dollar and yields, my ratio looks like it's a head and shoulders and about ready to fall. As this falls, guess what? This election, which is November 5th, gap up. See that big, huge, nice, beautiful gap? That's the Trump bump. Then we had a little thump. Then we continued higher. And then underneath the surface, this is important. I'm going to get to that over here again. Underneath the surface, right here, from December 2nd until December 18th, this was distribution. Underneath the surface, I follow net selling, net buying. I follow breadth, expansion, contraction, breakdown. Since December 2nd, my breadth indicators started absolutely falling apart. And so literally on that Monday, Tuesday, before December 18th, and before December 18th, I'm talking about right here. I know it's hard to tell because we're on a 2-hour chart, but trust me, come on, right there. Okay, on December 18th, I said, okay, small caps have suffered, and I have some rate differentials that also showed weakness underneath the surface. Net selling has picked up. Breadth is starting to decay. Long story short, the Qs and SPY are going to catch down. This particular big move that you see right here, right there, is in fact a 3% SPX down day. Big deal on the 18th, on December 18th. And it was a Wednesday, and it was basically 2 days before where I said, careful, careful. We've had enough degradation in breadth and in net selling and in my rate differential with the yen that we're going to have an air pocket of risk. So in fact, I actually, a post that I put out after I closed my trading room, and we hadn't really thrown up yet. And I said, be careful. If we blow through that -2% in SPX, we will be at -3% in a New York minute. And the result was this. Now, we did bounce violently, and then we just made lower, right? This is, in fact, you can kind of see, oops, sorry. I'll get these tools right. You can kind of see anyone technically who's on this shorter duration. This is a lower high. This is a lower high until January 13th, which was right into the inauguration, MLK Day. We had that whole election gap filled. And this is when, you can see the date, January 14th, right? Can you see that 9:30 in the morning? I posted this and said, this is my dollar yield ratio. We've had a strong push higher in the 10-year up into 4.79. I had done also a post saying, be careful, this is where we leave the Goldilocks zone and equities come into distribution, which is what we had, right? This whole kind of crazy Ivan formation. Now, this looked on MLK, we had inauguration, it went smoothly, relief came, dollar and yields rolled over, my ratio rolled over, and we opened up here. We bounced a little bit, and then we literally opened up here. And I had 60, I'm going to put this in green, hopefully you can see this. I had 60.53 as price target for this bounce. Okay, so after this, you're going to see, hold on, this is what it looked like the next day. January 15th, here's what happened. Boom. And this is what I posted for, okay, this is going to mean dollar and yields continue to soften. What is that? That's a tailwind for equities. Look where we opened. We opened right here, and now we didn't just go to 60.53. We went all the way back to the highs. And I think you've got 60.11, right, as a call wall today.
Yeah, there's a lot of positions sitting up there at that 6,100 area. Yep.
So I actually didn't think we'd go like crazy hot fire up here, melt up kind of thing. But this was so far so good. This thesis of yen's going to bounce with bonds, 10-year will soften with dollar. That will serve as a tailwind for equities. We also have this kind of, Vanna rally from the election gap fill, which from, again, November 5th is over here. January 13th is right here. And where are we right now today? We are in this neck of the woods and starting to soften. So that's what I want to get into a discussion with you, because where are we today? Oh, here we are. So we blew through my 60.53, which was price target. Can you see this? 60.53? And we're obviously all-time highs. We beat them. Now, do you see melt up? I see realized volatility of SPY dropped right from 22 down to 9. And this was vol control chasing. To me, this looks technical, not fundamental. I think you posted that as well, and I agree with you on that. So what do you have from here from an option standpoint? Because what I have is risk of a BOJ hiking tonight. Ueda is going to have his press conference about 7 p.m. And then they're going to make a decision. Now, it's already priced in that they have, in fact, hiked. I would have to show you. But basically, they've already basically priced in 25 basis points. So the surprise would be if, and I can unshare this right now, if they don't, let me kind of get to the kernel of the corn here, that if they do not hike, then we're going to have some variation here in what can happen with equities. So in a nutshell, we have this kind of melt up vibe going on. And I believe, and I always am spying this, if we have bullish option flows, which we have right now, right? We overshot my 60.53. It's not bearish until we can get back below 60.53, full stop, as far as I'm concerned. We come back and retest 53 and then move higher, it's melt up, right? So that's just technical. Options are kind of showing that. It's pretty strong. But macro flows can interrupt macro triggers can interrupt the bullish flows. So this is what I posted basically. I don't have to share it with you. I'll just read it. We get a macro trigger like Bank of Japan tonight in an open meeting, and they say, yes, we're going to hike 25 basis points. It's already priced in. It's a dovish hike. If they say 50 basis points, that'd be a surprise. Even before FOMC next week, that would be a surprise. Repeat. Are they ready for a surprise in options land, or would they be chasing to the downside? Because if the Bank of Japan pushes out, for example, this 25 basis point hike, then we're going to get the yen and bonds to fall hard. So if they follow through with 25 basis points, we're still going to grind higher, which I think is your baseline bet, and I agree. If they were to say, nope, we're not going to hike at all, we're going to push it, we're going to push it out to the next meeting, yen, TLT falls hard, what happens to yields? It pops up, dollar follows, and equities fall. And again, that in a nutshell, 60.53 is support until it isn't. So take it away.
The yen flag is very interesting. That's certainly not something that will come up across our radar. So I think that's fascinating. What I think is we had talked about, or you had mentioned realized vol, and realized volatility has been very high due to the kind of CPI calamity. And I know you just flagged that that wasn't the cause, but just marking that date around then, obviously realized vol has been very high. So 1 month realized vol is 14 right now, which as you can see on this chart, the green line is historical realized vol, going all the way back pre-COVID. And so it was into early December, right before we were talking, FOMC, that realized vol is really dropping quite a bit. You mentioned 5-day realized vol is coming down, obviously, because as the market comes up into that 6,100 area, there's options flows that start to reduce the amount of market movement. And so what has really, I think, helped to drive the market higher, you mentioned Vanna. So when we had the S&P crashing kind of in that January 13th timeframe, so right in this area, vol's gotten absolutely smacked off of that date. And so not only is there just straight options flows that will help to press the market higher, you also have vol control funds and things like that you mentioned before that will trigger off of realized vol kind of contracting as well. So the interesting thing about these flows is that when they are predominant and they exist in the market, then we start to have moves that are bigger than many expect. So to your point before about having, more of an aggressive upside than maybe we'd anticipate, I think when you have a lot of that elevated volatility that can get crushed is when you can really push things higher. Now, to your point on Bank of Japan, what tends to happen is, in my view, at least over here the last really 2-3 months, is we've had a lot of instances where the market goes into these big events, and I would even say FOMC, certainly into the CPI print. If you looked at the price of the 0DT option, for example, the market is pricing in very little movement with these events. And then what happens is we're getting slightly more movement to moderately more movement than the market is pricing. So let's say the market is pricing in, 60 basis points of movement as a one-day move, for example, into FOMC or into CPI, right? And then what happens is we get a knee-jerk reaction that is much bigger than 60 basis points. In other words, the reaction is bigger than the market anticipates, which means that we get a volatility jump. And that really makes, that sends kind of like an echo or a shock wave through the market a little bit. And so the reason that I bring this up right now is that if we just use the VIX as a barometer, the VIX is trading at 1460 is where it's marked. It's not trading at that level, but that's where it's marked. Historically, if you look at the difference between 1 month realized vol in the S&P, which is on this chart, it's currently at 14, as you can see here. Historically, there's a 3-point difference between 1 month realized vol in the S&P and the VIX. So if you want to figure out what fair value for the VIX is, you take 14, you add 3, you get like 17. So when I take that, I go, okay, we're trading arguably at light implied vols on a baseline barometer, right? Because we're only at 14.6, and we know you bring up the yen announcement today, or the Bank of Japan announcement today, and we know we got FOMC here in a week. So the market at the moment is not positioned to handle risk at all, right? There's no event volatility premium in the market at all. It's priced for perfection. So if we get perfection, then that's great. We can continue to grind up. The question is the barometer for perfection too high? I think that maybe it is. I think there's a little bit of a Trump bump here in the markets. I think people are feeling pretty good. I think that short-dated options players are trying to take advantage of the last couple of days of flow and being maybe before the big risk triggers of possibly BOJ today. And I was really flagging FOMC next week. And so, it doesn't take much to upset the apple cart in this instance. And the other thing that I was highlighting this morning, just as an example, is, there was this at the start of the year, right? Nvidia was breaching 150, and it looked like, and you looked at semis, and it looked like the market was going to go absolutely bananas to the upside, right? And there was this really strange flow that came in on this day where we saw massive call selling. And this was right around Jensen Huang said, that he thought the quantum computing, wasn't going to happen anytime soon. And, that meme got totally smoked, and the market really gave up those gains, really quickly. And so when I look at this, I don't know what will happen with the Bank of Japan. Certainly, I don't know what's going to happen out of the FOMC, but I do think that there is a real lack of stability in the market right now Number one, due to the proliferation of short-dated flows around Stargate is the name of the AI. Thank you for someone pushing that in the chat. But also, what are the chances here that Powell comes across with another even mildly hawkish message? And, I understand the risk that you mentioned in the BOJ, but even just a week from now, it seems like there's not a lot of risk premium being tied to Powell. And maybe he comes across with even just mildly more hawkish than the market expects, and then that could really drive a pretty nasty response. So
let me just comment on the FOMC, because I have a play-by-play in this one. I'm strangely obsessed with yields and yield curves and the rest. I really do think that FOMC pause next Wednesday is in the cards, and this is only reason why Bank of Japan would even be able to hike, by the way, tonight. So the question for me is, if Bank of Japan is going to do nothing, that'd be a big surprise. But 25, like I said, baked in, or 50 would be shock. That's more likely, later. Such a safe bet anymore. When he was working hand in glove with Yellen, you absolutely could predict when the policy intervention was coming in. If you go back on a chart, you can see November 1st of 2023, we had a massive rally. And of course, it was short covering from the July, August, September pull down, but it was also especially the Fed pause was officially announced, and the Yellen Yahtzee. I refer to it as a Yellen Yahtzee, where Yellen was basically financing our fiscal deficit with shorter duration versus longer duration, notes and bonds, which is very liquidity sucking. So it provided liquidity, and we need liquidity to keep going. So big picture, liquidity is kind of expected to flatten out this year. I'm very bearish in the second half. I'm on record actually saying in June of last year that I could see recession pulled forward at the end of 2025. I still see it. Nothing has changed. And it wouldn't have even mattered if Trump got elected. So now we have this, bullish business optimism, that's great, but Powell's not necessarily going to play ball. And then we have a bigger risk coming in after of the QRA, which is the quarterly refunding announcement. So when I referred to that November 1st Fed pause and Yellen Yahtzee, that was a quarterly refunding announcement that was very liquidity producing. We've got Besant, new Treasury Secretary. We don't really, I know he's adored by Wall Street, but the point is we really don't know what he's going to do as it relates to the duration and the amount of. So I think there's going to be some gyrations, especially around, again, expected Fed pause on Wednesday, right before Monster Mag 7 earnings, I might add, that evening. And then we've got the QRA, which is the 2nd and the 5th of February. Still, having said all of that, I'm still very bullish in Q1. So I had already posted, in January 5th, that I'm still very bullish. Semis into 272, Nvidia into 160, 170, the Qs into 548, et cetera, et cetera. So we have already kind of a bullish backdrop that is still in play. Also, this Stargate, yesterday, it's kind of, again, cheekish on my Twitter, but I borrowed a quote and said, hey, if you want to attract sharks, you put blood in the water. So that's exactly what they did. So they announced this, with Oracle and ARM and SoftBank, ginormous flow of investment into the AI ecosystem, which again supports the sentiment, but metal, rubber has to meet the road at some point, and the dollars have to be found. Musk immediately started pissing on the whole thing, and then Sam came in and pissed back, and it's just a pissing contest, and it's not really anything that you can really hold on to. But I like your flow idea where it's priced to perfection. So if we do get an interruption, Powell doesn't play ball, Bank of Japan doesn't play ball, or even Besant, even well-intentioned, is obviously liquidity danger zone. I think we have enough in the next few weeks where macro could interrupt these bullish flows, and that's what I'm on the lookout for. Long story short.
Yeah, the Stargate project was interesting because those are the names that really led the market rally, I think, so much over the last year. And looking specifically at Nvidia here, this is the implied vol of Nvidia versus the last 30 days, and this is 1 month vol, and these are stats over the last 30 days. And so this skew rank, or the bullishness in Nvidia, is starting to creep up. So it's at 67% right now, which is saying higher than 2/3 of the history. But the implied vol is very low, right? So the expected movement is quite narrow. And to your point on macro too, if you look at this date, the 29th on the earnings calendar, you're going to get a big update. So there's the interesting thing of, hey, Stargate is going to be this thing, and we're going to throw $500 billion or just make up some number, to your point. But the rubber will meet the road, I think, on the 29th in particular, because you got Meta in there, Microsoft in there, Tesla in there, which is the poster child for the Trump administration. I think if you're gonna obviously express Trump in an idea, it's Tesla right now. And so really over the next week, we're going to get a whole bunch of updates on that. And look, if these names break higher and the flows come in, well then ride that bus, right? Why not? But there really wouldn't take much to flip this thing around. It kind of embedded in the
Tesla,
idea.
by
I think,
the way.
yeah.
Are you moving
I
on
do
from
too.
Tesla?
You and I had emailed back and forth about that a little bit.
Yeah. This has been a phenomenal play, actually, from earnings last into this really, really strong breakout, which basically was a double in my mind. So when it got back above 272, I said, this is a double. It did. It hit it, and then it came back down. I'm like, as long as it stays above 390, I have these kind of monthly, weekly. When I pull back, again, I'm more of a swing trader. It's good. It's actually likely to go and tag 502, but it has to stay above, key levels. Anyway, the point is, we're both, you're looking at the option flow for this. And at the time that this came up, it was just not only an oversold play, kind of like what Apple looks like right now into earnings, but also a Trump play. And I had already made that call 30 days before the election that Trump would win. This is, it's obvious that Tesla is the high probability with Bitcoin. Anyway, the point is, it's still in play. So unless we get some real, rate or dollar spikes higher, and for the interim right now, they're choppy to sideways. It's not a big threat like it was before, where we were absolutely pushing in out of the Goldilocks zone for the 10-year. We need to kind of revisit that in February, March timeframe. Then I think it's going to look very different. But for right now, Tesla still looks defended.
Right. As long as the macro picture is good, being long Tesla to me makes sense. This is gamma by strike here, and oftentimes these levels can be major support and resistance zones, and you can see how big that 400 strike is. So this is call gamma and put gamma here. Really big positions at that strike, and I think that really helps to keep Tesla above or kind of tied to that level. And if you look at the fuel available in this thing, there's plenty of gamma all the way up through 450, which is a good 10% rally here, easily. And then here's that 500 strike that you mentioned before. So oftentimes I believe that these options positions, when we get past either above or below, kind of overbought or oversold, where the big options positions are, that can be a flag that indeed stocks are overbought. So if we were to go over 500 right now, Tesla, based on positioning, I'd say, hey, look, we're overbought. But there's plenty of fuel, certainly up into 450. And I just think that, if I was going to express upside, I'd much prefer to express that via Tesla than Apple, which, just seems to be trading in I agree with you in the oversold perspective, but I think a lot of people struggle with buying the stuff that is already so strong. Apple, a lot of people were dunking on Buffett over this thing, when he was rolling out of his position. And you look at what the market did. I know we just kind of pivoted to single stocks here a little bit, but if you look at, the market is now at all-time highs, and this thing is being kind of left for dead at the moment. There's a bunch of positions at 220 that I think are short-term stabilizing, but, this is not a good look when the market's so strong to have this stock as currently the third largest in market cap. I had wrote in my email to you that if I was going to make an end-of-year bet, I think Amazon overtakes Apple as number 3. There's a huge gap between market cap size.
Yeah.
There's a huge gap in market cap size between Apple and Amazon, which are both around 5-6% of the S&P 500. Then you drop down to 2% at Meta, and Tesla are both 2% in size. So there's a huge gap between the top 4, I would call it, in the index. But this is looking kind of sick.
No, this is, however, a technical bet that, remember when
Mm,
Nvidia fell from 153 right back down into, hold on,
128.
129.80? Yeah,
Mm,
129.80. It was a massive standard deviation move in 4 days, right? So
mm,
129.80 is my line in the sand for this. I have a financed call spread that I put on for December 20th, and it was hot fire flames, right? It happened very quickly. I had it for March. Doesn't matter. It's doing great. It went right back down and revisited, and then it popped right back up. So to me, Nvidia and semis, even if they've been going sideways for like 6 months, they're still bullish. They right.
yeah,
So
and
this
semis look good for
yeah,
sure.
and but Apple has just done a kind of a similar thing. I actually had a great we did this live. So at 258, it formed a perfect reversal pattern on the weekly and the daily. Anyway, I had 237 as price target. When I went through the 237, I had to keep looking for lower price targets, right? So the point is, it's coming into very strong technical support around 217. That's right before it goes into earnings on January 30th. It just makes sense as an area where it gets defended and has a bounce because it has fallen so much from that what it hit
Mm,
260 all the way down to right now 220. So that's all I'm saying. It's technically it's worth a flyer for a bounce into earnings. It still has not broken trend. So even though it's a mess, this is where I look for some stabilization for a counter trend rally and then look for it to prove itself. But yeah, I agree with you. As far as a trend breakout, Amazon is the strongest. Nvidia, seriously, and semis are not going away, at least not in Q1. Apple looks like an oversold bounce. Tesla looks fine. It's digesting an outsized run. Already hit my 474 and came back down. I can still see it basing and moving higher. All of these are the Mag 7, or what Hans calls the balance sheet heroes, right? That's where a lot of folks are hiding out, where the market has advanced so strongly in the past 2 years because of this whole, concentration risk. We're not getting into that point just yet where we need to be aware of yen carry trade unwind part two. We're not there yet, but that will be a risk, I think, coming into Q2 and definitely more weakness into end of year. Depends on the liquidity. Again, policy intervention depends on option flow, which right now is still pretty supportive. And I'm
mhm.
still focused on dollar and yields. So that's going to be always the backdrop that I use for the market direction. And right now, it has not, what do you call it, a weakness in the option flow, but it could be very productive for a short after Q1. I think we'll see a lot more juice here on short side on a two-sided market.
Yeah, and on your call on the equity space, these are pretty bullish flows, but they are very short dated options flows today. So even they
Yes.
have this Stargate, news out there, and the S&P is right up against the 6,100 kind of call wall area. These are options flows here. So bullish options flows, the indicator goes up. Bearish options flows, the indicator goes down. And if you look at this, there is long dated flow is purple and zero DTE or next expiration flow is teal. And so when those two lines track each other, that tells me that the only real flow happening today is short dated, transient kind of order flow. Now, to Samantha's point, if BOJ or FOMC is the trigger that unlocks longer dated buying, in other words, if you see this purple line going up in excess of what short dated flow is doing, then that to me is the sign that the breakout is real, that I really want to push for the next price targets in the market, which we generally watch what's called our call wall is that. And so as those options positions roll up, and if we see longer dated options flows come into the market, I think that's a great signal. You just said something interesting to me, which was about concentration and the correlation or the concentration in the market and breadth, right? All that is kind of related. That really fell apart into FOMC. In the option space, we like to look at what's a metric called Core 1M, which is a SIBO correlation metric, and that measures the correlation of the top 50 stocks. Generally speaking, when you have a bullish trend in the market, correlation goes down because names like Nvidia or Tesla will break out in excess of the rest of the market, right? The market gets left behind.
Mm-hmm.
I had alluded to the fact that the stage was set for a major vol spike if anything went wrong in August, right? And we got the yen carry trade that broke down. The yen carry trade breaking down occurred right into this right here. This was a record low in this correlation metric, which told us that breadth or the number of stocks moving up in excess to the other stock we'd never seen sort of the market kind of like breaking apart or diverging like this ever. And so once that happens, once we were finally delivered a couple of negative catalysts or negative triggers, all of that excess had to be unwound essentially, right? The market had to kind of snap back into formation. And then this corresponds exactly with August 5th and the huge break. So what's interesting to me about this, and your point about the Q1, if we do get a little more of a rally here, we're right on the precipice of breaking back down into this excessive extreme territory, right? Where the market is way over its skis. We're not quite at that, like obviously over its skis. We're at the lower bound where if Powell does upset the market, there's plenty of stuff to unwind and send us lower. But at the same time, if he's sort of neutral or the market's happy to break out here, we're going to very quickly extend into this, very kind of disjointed, unhealthy market stance, right? And we're going to see that with a metric like correlation really breaking down. Usually when correlation breaks down, that tells us that vol's getting oversold as well, which is very risky. And so, we're very quickly, I think, going to spill into kind of excessive overbought market, I think, which is a risk if we rally from here.
Let me show you a chart that I used. So this happens to be a growth value ratio. You've already seen I do dollar yield ratio. I do a lot of ratios, tons. Anyway, this one is very, very specific because we had, you can kind of see this outsized move in growth relative to value. Now, July 9th, I literally did a webinar and I said, this is ridiculous. Be careful, concentration risk is way extended. And then July 13th, I said the yen is done going down. We're going to have a move higher in yen. We'll bring bonds, along with it, and gold. They typically kind of pull together. But more importantly, it's going to create this unwind. RSP to SPY is another one that I do, which basically is equal weight versus the cap weighted SPY, right? Okay, so this worked perfectly because not only did this represent a ginormous, right? Oh, I don't want this in green. I want this in red. Not only did this pullback, you can see this pullback in July, happen where the Qs lost 15%, SMH lost 25%, Nvidia lost 35%, came all the way down to a price target, which was 96.97. And then, of course, the August 5th convexity rally of size, which was outsized, and everything went right back up, like, popped up like a daisy. Oh my God. So, but in this rotation, the yen at the time had a very bullish push higher, with yields had already started falling. Oil was falling. And because yen is a carry trade, oil is a carry trade, treasuries are a carry trade, it really was a deflation scare. It was a growth scare. We don't have that right now. We have actually, CPI tickling, a little higher, and, Fed pausing, potentially, definitely slowing, pausing, et cetera. So we have a little bit different backdrop. We don't really have the same perfect backdrop for a yen carry trade unwind into a deflation impulse. If I kind of show you, we got up here and I put, okay, now we have in this growth value ratio, it's time for growth to calm down, and we get a little energy pop. We get, some metals and minor, we get some utilities, we get this and that and the other thing. But basically the boring value stuff came up off the bottom, right? Take a look at, 3M and others. So now we're just popping up right now. We're not really in a situation where I am going, this is not dire straits here. This was dire straits. We definitely had a growth scare into deflation with falling yields, oil, the whole thing. This is really getting ready to move higher. So we've had, it's coming down, and now it's kind of basing, and it looks like it wants to move higher. We break below zero, by the way, the whole thing is off. The whole thing is off. And a lot of that has to do, by the way, with another chart, which I want to show you, which is as boring as this could be. It is absolutely instrumental to how I time rate spikes. So give me a second. Okay, here's your 10-year, 2-year. Can you see this chart right here? Okay, I want to actually highlight it because it's going to be a lot easier if I do. And then I can do some annotations. This is a side-by-side with the daily, with the weekly. So right here in September 18th, And right here, September 18th, I actually posted, and you can see it on, a little tease on Twitter, but I did a big client post, pre-market before the September 18th 50 basis point rate cut by the Fed. And I said, time for a yield spike. So this is actually a yield curve. It just means in this particular case, when it's moving higher, you can see on the daily, we had what's called a bear steepener. By the way, I doubled down and said right here on December 12th, time for a yield spike. So as yields move higher and this bear steepener moves higher, equities get a little bit more wobbly, right? And that's exactly what happened through this chop that we had post-election in November through December into January. And then most recently, bonds and yen are going to have a little bounce. Why? Because we're going to have a flattener. For those who are into the 10 and 2-year yield curve, bear steepening, yield of the 10-year is moving higher faster than 2. If it starts to come down, equities are getting supported, right? And we're having a little bit of a flattener. So that's all I wanted to say about that on a daily. This is a great way to time TLT trades, right? Or your 10-year T-note futures. Okay, but the thing I want to get to is this. This is a daily time frame. This is a weekly. Why do I love weekly? Because it really shows the power of a move. And you can see, hopefully you can see, this sucker was very green, right? Came down with a shallow pullback, which is the difference between disinverting above zero, pull back to support, and look at it hold brilliantly. Look at it hold, right? Banks love, by the way, cheap and steep, which is why banks did so dang well, right, of late. And now look at this thing. All it's doing, big picture, what is it doing? It's just digesting. All it's doing is digesting. It hasn't broken the trend. This is still a bear steepener waiting to happen. So that's why I say make hay while the sun shines in Q1.
Yeah, that chart totally makes sense and syncs with this idea that as it digests in Q1, we could get into that overbought kind of territory where, from my perspective, the vols get like oversold, correlation really breaks down, and that's the really risky kind of sentiment. I wanted to selfishly ask for myself, but also we did have a couple of our members asking to show how you do use SpotGamma. That would be really cool to see if you have a few minutes. I'd love that. And then you can give us kind of your TLDR for the next week, and we can wrap things up.
Okay, so this is, I'll show you, I read your founder's note. This is just such good stuff. Love, love, love. I've worked with Archana for many, many years. In fact, when you launched your trace tool, she was on it in a New York minute, like literally that afternoon. And remember, she's like, I used it. I used a contract, but it really worked. Now she does it every single day. Her handle on Twitter is Butterfly Queen because she loves using butterflies in her
Butterfly
options.
Queen. Gotcha.
Yes. All right. So she does this. She brings up your trace, and for my live trading room, which I close, they continue. So those who like to chase, I've got what's called the Chase Live Huddle. And so she and Nelson will go and kind of guide clients and share their trades of what's going on for the rest of the afternoon. But for example, here's her, her highlighted today. Based on my understanding of the 0 DTE trace, 610, right, is the highest call resistance and hence chances of us pinning there today. If we get below 60.80, then support is at 60.55. This is her note, so I'm just posting which is the highest put support. 66 had a lot of calls also, so if things get dicey, then 60.60 is where we close. But based on Mag 7, chances of us tagging, 61.10. So this is what her channel is basically, she's posting her trade. She's also live moderator for my room. She's also live moderator with Nelson for the afternoon. And she's interpreting your trace for her option trades and to help clients know, where the channel is. In the same way, I've got.
And on that 6110, there's this big trade. We call him Captain Condor. He's got 30,000 lot Iron Condor 0 DTE today. And so, those of you who are even swing trading, looking at when you want to take profits, where you want to take profits, 30,000 S&P contracts is very, very large. And that is what those big purple and red bars are there above. And that's why Archana flagged that 6,100 that we mentioned in our note, because there's such a dominant position there in the market.
Yeah, which beats what we had for SPY volume this morning, was like 4 million shares. It was dog slow. Okay, so Mike is also, Mikey is my live trading room moderator as well. And he's really like your call Matterhorn pattern. So he's also pushing, his analysis on more of an intraday basis, where I'm more focused on the swing, right? So I want to clarify that I don't do a lot of chases. They do.
Mm-hmm.
Rithika, Archna, Mikey, Nelson, they're very focused on the chase. So this is, for example, how he is using your other hero kind of tools for the most part. But this is, let's see, example of what does he have here? We have 11:30 auction. Oh yeah, he's also warning when we have macro moving news and your Matterhorn pattern. You want to talk to that a little bit?
Yeah, the idea here is that when you see these flows pick up, so in this case, the orange is monitoring specifically call flow. So if that line goes up, it means people are buying call options, and the Matterhorn pattern is sort of, we've hit an excess high. So, if you get the Matterhorn, it's essentially saying that, hey, there was tons of bullish flow coming in. That may have been the driver of price action, and if that call flow fades, then we may get some mean reversion in the stock. So that's a great way. You mentioned chasing before. If you can identify that Matterhorn pattern forming, then you want to kind of ride that wave.
Yeah, so he's absolutely a diehard as well in using the SpotGamma tools. Hans is
cool.
And Hans is another who I work with on more of the the option tactics on a swing basis. So we're really more focused on that. But let me just see what he's got here. All right. So Hans is, okay, looking at McDonald's. Okay, first of all, he's bullish. Netflix, we talked about that. We've got like 1035 price target for me anyway. He's looking at McDonald's. I was very, very convinced that McDonald's was a rollover into some key levels. It was a gap fill on a weekly. So that was one of the trades. And he talks about this, but he on a swing basis, okay? So in general, he is using the call walls. I don't know if you can see that. There you go. As it relates also to your equity hub and your volatility center. He's very much a volatility trader. He's the one that has managed many billions of hedge funds, and as it relates to protection. And now he is teaching and actually trading and sharing all that with our members. So he's using the call walls, but as a way to set up, also skew, ways to structure trades. Let's see, what do we got here today? He's got a nice, again, that's
Condor
more
trade again.
Yep. He's more short duration. Okay, so he's
cool
still bullish.
that.
Yeah, he's still bullish as well. But for the most part, I think that he's using it in larger part for the swing setups where he's using February or March type of option plays, and he's referring oftentimes to the equity hub and the call wall. But we talk about all these things also when we did our webinar. You've got some great charts about how realized volatility and such are falling into earnings, right? So how to set that up, because sometimes the pricing is just too low, as in the Netflix. So that's where we're really trying to identify the mismatch between what's happening in the options market with, for example, my technicals or his vol skew, your call wall. We're trying to put all these disparate parts together, set it up as trades, put it out to clients, and then protect, right? So position, profit, but also to protect. That's how my whole team thinks and operates. And that's how your tools really are used every day.
Well, then, thank you so much. I appreciate you going through that. We did have a couple of requests, so it wasn't all just me being selfish, but I love to see how people use it. And I would just note that I think a lot of times technical traders or even swing traders could use volatility and looking at skew as a way to understand how the options market's pricing things. It can be really interesting is just through oversold, overbought kind of sentiment indication. And so I always like seeing that. So I know we're kind of running up on time. I would say that the way that I'm positioned over this next week is very simple. When we're in this positive gamma position, which we're in, we didn't get into positive and negative gamma too much here, but we have, and we were talking about the zero DT condor position. There's reasons to think that the options market is generally going to support equities in here. And so I generally lean long in my own portfolio, but I'm now starting to add hedges in the form of collar trades into FOMC. And so I'm trying to sell short dated calls, and I'm trying to buy February and March puts on the chance that Powell is hawkish, or maybe now I have the yen carry trade or the Bank of Japan, excuse me, that could throw a wrench into things here. Because volatility is now collapsed enough, implied volatility is collapsed enough that to me, put positions now are a reasonable price. And so I like adding hedges in this point, even though I'm still leaning long in the market. If we break 6,000, I know you had 60-50 as your kind of, I believe, your risk off sort of metric, and correct me if I'm wrong there, but we're really watching 6,000 as this area that if that 6,000 level breaks, I would expect kind of dip buyers to show up before that. But if 6,000 breaks, then I would expect the VIX to start to go to 20 very quickly. So I'm leaning long here, but I am starting to hedge my portfolio out, trying to take advantage of what I think are some reasonably cheap put positions into FOMC and earnings season. So that's kind of how we're looking at things. Samantha, if you could give our kind of give a quick TLDR, what you're looking at for next week here, and then we'll wrap things up.
Sure. I'm going to show this chart again, and the reason why is because I am. Can you see it? Yes, yes.
Yes, absolutely.
I'm very focused on dollar and yields, and obviously the macro triggers that can interrupt the bullish flows. So I also want to just be very, very, cognizant of the fact that we've got these massive gaps, right? Look at SPX. I mean, it's just impressive. This might have been yesterday, but the point is we are above that kind of line in the sand where I thought we were going to peter out, which is that 60-53. So long story short, above is bullish, below is bearish. It's that simple for me. Can we have a little push higher, right, with the Bank of Japan surprise with like a Friday lotto? That might be fun, but that's not really my game. But the point is, if we are still falling, this yield dollar ratio is falling, my rate differential, which is confusing, I know, but I show clients, they know what the heck I'm talking about, is rising. It's still bullish. If we stay above 60-53, it's still bullish. But if we start to break down below, I'll get rid of that. Look at the incredible gaps that we have still to fill. Like we have this gap to fill. Hold on. And by the way, these will fill. It's not a question of if, it's just when. Here's another little mini one that's going to fill. Here's a nice big one that's going to fill. And then we have some more down here. Don't forget these. So in other words, once we start this transition lower, we have magnets on the downside. And then we'll see what happens, right? I don't want to get too ahead of this ballpark, but above 60-53 is bullish, below is bearish, and I'm watching macro triggers to interrupt the flows. At the same time, I'm watching dollar and yield and this beautiful, right, steepener that has only flattened to allow for this ginormous oversized bounce since last Monday. But as it starts to move higher, that's risk off. And my growth value rotation, if this does get rejected and starts to move lower, that's risk off. So for right now, we've got, like you said, more likely kind of a grinding higher or sideways into FOMC, lots of earnings. I would say, yes, puts are cheap. Realized volatility is really just, it makes a lot of sense to protect into these events, including Bank of Japan tonight.
Yeah, and a little heuristic, if you divide the VIX by 16, you get the estimate of one-day S&P 500 moves. And so we were, when the VIX is at 16, that's roughly saying, hey, we're projecting 1% moves in the S&P 500. Now we're down around, 60, 70 basis points of daily expected moves. And, if you get one negative trigger here, and honestly, even if Powell comes out as dovish, then that could also generate an upside, an excessive upside move as well, right? Volatility works both ways. And so, we do need to be, I think, cognizant of not being short volatility, I think, into these events. But I, in particular, do think hedges are warranted, I think, at this point and make some sense based on prices. So, Samantha, I know we just breached the hour a little bit, so thank you for staying a few minutes extra
My pleasure.
with us here. I learned a lot. I got a page of notes here, things I got to go check out. And I would just say, for those of you who are new to SpotGamma, saw some of our tools here. Samantha was very kind to show how she uses it. You're going to be hearing a special offer soon. Samantha and her team are going to be sending out a special offer. So please check out that. That's on our alpha membership, which shows you the trace tools and our volatility tools and all those kinds of things. And I think, Samantha, we're going to be doing the same for the LaDuc membership as well. We're going to be sending out a special offer for people in the SpotGamma community to access your amazing content and insights.
Thank you. Appreciate it. We get to analyze it and set it up every day for clients and on all assets, by the way, and across all time frames. So we really try to be service, financial research firm. And yes, we do trade alerts. Okay, so you have a great rest of your week in Costa Rica.
Thank you so much.
we'll do this again soon. And good
Thank
luck,
you.
everybody.
I appreciate it. And I always like to say too, a lot of times you start, following new things and there's not a lot going on. We don't have that problem here. There's going to be a lot going on in the next week. So proof is going to be in the pudding with all this stuff, right?
Absolutely. Okay. Trade safe, trade
Absolutely.
well. Have a great rest of the week.
Thanks so much. You too, Samantha. And thank you all for joining us. And we will see SpotGamma people back on Monday, 1 p.m. on Monday. So thanks so much and good luck trading.
Cheers.
Subscribe to LaDucTrading YouTube channel for more videos.